Now that we've completed the revenue portion of Part 1, we'll continue with the next step, entering the organization's expenses. In this section, we'll record all costs incurred during the year, categorized by type. These entries will allow us to calculate total expenses and ultimately determine whether the organization operated at a surplus or deficit. Let's begin entering expenses. Moving to line 10, grants and similar amounts paid. Click Add Grants to open the detailed entry screen. This section is used to report any grants your organization paid during the year. This includes scholarships, award, financial assistance, or other payments made to individuals or organizations in support of your mission. For our example, New Hope Community Outreach provided scholarships and community assistance totaling $20,000. First, select the type of grant. In this case, these are cash payments, so we'll select cash. Next, enter the total grant amount, $20,000. This should reflect the full amount distributed during the year. Do not net or reduce this number. You'll notice a message indicating if a grant exceeds $5,000, the IRS requires additional details to be reported on Schedule O. Since our example grant is above that threshold, we'll need to provide additional context. In the grant description field, provide a brief explanation of the purpose of the grant. For example, scholarship awards for local students participating in community education programs. This helps the IRS understand how the funds support your mission. Next, select the type of recipient, whether it be an organization or an individual. In this case, scholarships are rewarded directly to students, so we'll select individual. After selecting the grantee type as individual, the next step is to choose the class of activity. This field defines the purpose of the grant. In other words, how the funds are being used to support your organization's mission. Click the drop-down and select the option that best matches the type of assistance provided. For our example, since New Hope is awarding scholarships to students, we'll select Scholarship. Choosing the correct activity type is important because it helps the IRS understand the nature of your organization's grant making and ensures the expense is properly categorized. If your grant doesn't clearly fit one of the listed options, you can select Other and provide additional details in the description. Next, you'll need to provide a description for the class of activity. This field gives additional detail about how the grant is being used and provides more context beyond the category you selected. For our example, since we selected Scholarship, we can enter scholarships awarded to local students for educational programs. Keep this concise but specific enough to clearly explain the purpose of the funding. Now enter the relationship to organization. This field is used to disclose whether the recipient has any connection to the organization's leadership, such as a director, officer, trustee, or key employee. This is an important compliance requirement to ensure transparency and avoid conflicts of interest. For our example, the scholarships are awarded to unrelated individuals in the community, so we'll enter unrelated. If there is a relationship, it must be clearly described here. If your organization issued multiple grants and you want to track them individually, you can click Add Another to enter each one separately. Once all entries are complete, click Add and then Save and Close. You'll now see the total reflected on line 10. Now we'll continue through the remaining expenses categories, each representing a specific type of operational cost. Benefits to members. This line is used to report benefits provided directly to members, such as insurance, discounts, or other financial assistance tied specifically to membership. In our example, New Hope does not provide any direct financial benefits to its members, so we'll enter $0. Line 12, salaries, other compensation, and other employee benefits. This includes all compensation paid to employees, such as wages, payroll taxes, and benefits like health insurance or retirement contributions. For New Hope, staffing is a significant part of operations. Let's enter $60,000. Line 13, professional fees and other payments to independent contractors. This line covers payments to external professionals such as accountants, attorneys, consultants, or other contractors who are not employees. In this example, New Hope incurred costs for accounting and legal support. Let's enter $8,000. Line 14, occupancy. This includes expenses related to maintaining a physical space, such as rent, utilities, repairs, and maintenance. For New Hope, This reflects the cost of operating their facility. We'll enter $12,000. Line 15, printing, publications, postage, and shipping. This line captures communication-related expenses, including printed materials, newsletters, outreach mailers, and shipping costs. For this organization, these costs support community outreach and engagement. We'll enter $4,000. Now let's move to line 16, other expenses. Click Add Expenses to open the detailed entry screen. This section is used to report any expenses that were not already included in lines 10 through 15. These can include items like insurance, office supplies, software subscriptions, travel, or other operational costs. For our example, New Hope Community Outreach has several miscellaneous expenses that total $17,000. Instead of entering one lump sum, it's best practice to break these out for clarity. In the description field, enter the first expense category. Insurance and general liability coverage, for example. We'll enter amount $6,000. Click Add Expense to include another item. Next entry, office supplies and program materials. We'll enter $5,000. Let's click Add Expense again. Final entry, software subscriptions and administrative tools. We'll enter $6,000. As you add each item, you'll see the total update at the bottom. For our total other expenses, we have $17,000. You'll also notice that these entries are mapped to Schedule O, which provides additional detail to the IRS when needed. Once all expenses are entered and reviewed, click Save. You'll now see the total reflected on line 16. Now we arrive at line 17, Total Expenses. This line is automatically calculated by adding all expense categories from lines 10 through 16. This includes grants paid, salaries and compensation, professional fees, occupancy costs, printing and postage, and other expenses. When we add all of these together for our example, total expenses equate to $121,000. This represents the organization's total spending for the year. Next is line 18, which calculates the organization's financial result for the year. This is done by subtracting total expenses from total revenue. Total revenue, line 9, is $150,000. Our total expenses, line 17, is $121,000. $150,000 minus $121,000 equates to $29,000. Because revenue is greater than expenses, this results in a surplus, also known as an excess of revenue over expenses. If expenses were higher than revenue, this would instead be reported as a deficit. Now we move into the final section of Part 1, which tracks changes in the organization's net assets. Line 19, net assets or fund balances at beginning of year. This amount comes directly from the prior year's ending balance. It represents what the organization has accumulated at the start of the current tax year. For our example, $55,000. It's important that this matches last year's Form 990EZ to maintain consistency. Line 20, other changes in net assets. This line is used for any adjustments that are not already reflected in revenue or expenses. Examples might include prior year corrections or accounting adjustments. In our example, there are no additional changes, so we'll leave this at 0. But if you do have any changes, click Add Info. Line 21, net assets or fund balances at end of year. Finally, we calculate the ending balance. This is done by adding the net income from line 18 to the beginning balance from line 19, along with any adjustments from line 20. Beginning net assets is $55,000. Our net income, $29,000. And our other changes, $0. $55,000 plus $29,000 equals $84,000. This ending balance represents the organization's total accumulated resources at the end of the year. It should also match the balance sheet reported later in Part 2 of the form. This number should match your balance sheet in Part 2. At this point, we've completed Part 1 of Form 990EZ using a full working example. You've seen how each revenue category is entered, how expenses are properly categorized, and how those totals flow through to determine the organization's net income and ending net assets. Before moving forward, take a moment to review all entries for accuracy and ensure your totals are consistent. In the next part of this series, we'll continue building on this example as we walk through Part 2, Part 3, and Part 4, covering the balance sheets, the Statement of Program Service Accomplishments, and how to report officers, directors, trustees, and key employees.